Imagine turning a quick profit by riding the waves of the stock market in a single day, or watching your cryptocurrency soar in value over the years. Which path could lead you to financial success? Day trading or crypto investing? In this video, we'll dive into these two exciting strategies, compare them with the latest 2025 market data, and help you decide which one aligns with your goals. Let's get started. The 2025 financial landscape. It's 2025, and the financial markets are buzzing with opportunity. The US stock market, tracked by the S&P 500 index, is valued at approximately $50 trillion, covering 80% of US equities. Meanwhile, the cryptocurrency market has exploded to a $3.9 trillion market cap, a massive leap from $200 billion in 2020, a growth of over 1,850%. These numbers show the potential in both markets, but they come with very different approaches. What is day trading? Day trading is all about speed. Traders buy and sell financial instruments like stocks, ETFs, or options within a single trading day, aiming to profit from short-term price movements. The goal? Close all positions before the market shuts to avoid overnight risks. A popular choice for day traders is the SPDR S&P 500 ETF, SPY, which mirrors the S&P 500 index, currently valued at 6,388.64. With an average daily trading volume of 68.8 million shares, SPY offers high liquidity, making it easy to jump in and out of trades. Day traders rely on technical analysis, such as moving averages, RSI, and candlestick patterns, to spot opportunities. But here's the reality. Day trading is tough. Research suggests only 10 to 15% of day traders are consistently profitable. High transaction fees, slippage, and emotional stress can eat into profits. Plus, in the US, pattern day traders need a minimum account balance of $25,000 to trade freely. What is crypto investing? Crypto investing, on the other hand, is about playing the long game. You buy cryptocurrencies like Bitcoin, currently at $118,243, or Ethereum at $3,784.99, and hold them for months or years, betting on their long-term growth. The crypto market is open 24/7, unlike stock markets, and has seen incredible growth. Bitcoin alone has a market cap of $2.35 trillion, making up 60.39% of the total crypto market. Ethereum follows with a $456 billion market cap. But crypto is volatile. Prices can swing 10 to 20% in a day, driven by news, regulations, or market sentiment. Investing in crypto is more passive than day trading. You don't need to watch charts all day, but you do need to stay informed about regulatory changes, security risks like exchange hacks, and market trends. Side-by-side comparison. Let's break down how these two strategies, day trading and crypto investing, stack up across some key factors. First up, time commitment. Day trading demands a high time investment. You'll need to constantly monitor the markets during trading hours. Crypto investing? It's more passive. You might just do occasional research and check-ins. Next, risk level. Both strategies carry high risk, but for different reasons. Day trading involves leverage and intense volatility, which can quickly amplify losses. Crypto investing sees extreme price swings and comes with its own regulatory uncertainties. What about potential returns? Day traders aim for quick, small gains, but there's a high chance of losing big. Crypto investors may see high long-term gains, but they also face significant downside risk. And liquidity? Day traders benefit from high liquidity in major stocks and ETFs like SPY. In crypto, major coins like Bitcoin and Ethereum offer high liquidity, but smaller altcoins can be harder to trade quickly. Then there's the learning curve. Day trading has a steep learning curve. You'll need technical analysis skills and serious discipline. Crypto investing has a moderate curve. You still need to research the market, but it's more about patience and strategy. Finally, tax implications. Day trading profits are usually taxed as short-term capital gains, which means higher rates. Crypto investments held for over a year can qualify for long-term capital gains, typically taxed at lower rates. So, whether you're drawn to the fast-paced world of day trading or the long game of crypto investing, know the trade-offs before jumping in. Time commitment day trading. You're glued to your screen during market hours, 9:30 a.m. to 4 p.m. EST for US stocks. Missing a key moment could mean missing a trade. Crypto investing. You can check your portfolio occasionally, making it ideal for those with less time. Risk-level day trading. Leverage can magnify gains and losses. A single bad trade can wipe out your account, especially with margin trading. Crypto investing. Volatility is a major risk. Bitcoin dropped from $30,000 to $60,000 and back to $30,000 in 2021 within months. Regulatory uncertainties and exchange hacks add further risks. Potential returns. Day trading. Skilled traders can make small, consistent profits, but losses are common. A 0.5% gain on a $10,000 position yields $50 before fees. Crypto investing. Long-term holders have seen massive gains. For example, a $1,000 investment in Bitcoin in 2020 at $7,200 is now worth over $16,400 at $118,243. Liquidity. Day trading. Stocks like SPY are highly liquid, with millions of shares traded daily, ensuring quick trade execution. Crypto investing. Major coins like Bitcoin and Ethereum are liquid, but smaller altcoins may have thinner markets, making trades harder. Tax implications. Day trading. Profits are taxed as short-term capital gains, often at higher rates, 24 to 37% in the US. Crypto investing. Holding for over a year can qualify for lower long-term capital gains rates, 0 to 20% in the US, depending on your income. Real-world examples. Let's see these strategies in action with real-world examples. Day trading example. Picture a day trader buying 100 shares of SPY at $637.49 at the market open and selling at $640 by noon, pocketing $251 before fees. But if the price drops to $635, they lose $249. Speed and precision are everything. Crypto investing example. Now imagine an investor who bought one Bitcoin in January 2020 for $7,200. Today, at $118,243, that investment is worth over 16 times the initial amount, a $111,043 profit. But they had to endure wild price swings, like Bitcoin's 50% drop in 2022. Risks and challenges. Both strategies have their hurdles. Day trading risks. Financial losses. Leverage can lead to losses exceeding your initial capital. Stress and burnout. Constant monitoring is mentally taxing. Regulatory requirements. US traders need $25,000 minimum for pattern day trading. Fees. Commissions and slippage can erode profits. Crypto investing risks. Volatility. Prices can crash overnight, as seen in Bitcoin's 2021 fluctuations. Regulation. Governments may impose restrictions, impacting prices. Security. Exchange hacks or lost private keys can wipe out investments. Tools and platforms. To succeed, you'll need the right tools. Day trading platforms. Popular choices include Robinhood, Interactive Brokers, and TD Ameritrade, offering real-time data and charting tools. Crypto investing platforms. Coinbase, Binance, and Kraken are go-to platforms for buying and holding crypto, with secure wallets and market insights. Which path should you choose? So, which strategy is right for you? It depends on your goals, time, and risk tolerance. Choose day trading. You thrive on fast-paced decision-making and can dedicate hours daily. You're comfortable with high risk and have at least $25,000 to start. You enjoy learning technical analysis and market patterns. Choose crypto investing if you believe in the long-term potential of cryptocurrencies. You prefer a hands-off approach with occasional check-ins. You can stomach volatility and are patient for growth. Both paths carry risks. Never invest money you can't afford to lose. Start small, educate yourself, and consider consulting a financial advisor. Day trading and crypto investing offer unique paths to financial growth. Day trading is like a sprint, fast, intense, and risky. Crypto investing is a marathon, requiring patience through ups and downs. The choice is yours. But the key is to start with knowledge and discipline. If this video helped you understand these strategies, give it a thumbs up, subscribe, and share it with friends.